Hi, this is Tony English Realty once again. Hey, I wanted to address this current banking crisis that you're hearing about a little bit on the news, and how it's going to affect the real estate market in the future. People have been asking me about this. I thought I'd do a video about it. Um, this is not so complicated, but bear with me here. Let me go over what's happening. So the banks are in trouble because when the Fed raised interest rates, a lot of the banks have their money, their investments in mortgage-backed securities and treasury bonds and things like that, which they go down in value when they're set at a low interest rate and the interest rates go up. The value of those assets go down. Now banks are able to lend out and invest money basically about 5 times or something in that range of what their deposits have in the bank. And so they don't have your money. They have 20% of your money in the bank. So when people start getting scared and start pulling their money out, they run out of money very quickly. And there's some regulations on how much the bank can, to stay solvent, how much money, the reserves they have to have. And when it goes below that mark, the FDIC has to come in and shut it down and pay people off. Now it goes up to, I think, $250,000 that they will guarantee. The smaller banks have less regulation than the big banks. However, the big banks are in the same situation. So there's a huge crisis going on. Now, what the federal government has done is they've basically done a $2 trillion bailout of the banks. So what they're doing is they're saying, if your bonds went down and you need to sell them to keep liquid, then what we'll do is we'll pay the difference to you. And so and you're going to have to start paying us back in about a year. So right now the government has quote unquote saved the day. But what's going to happen is the Fed's not going to be able to keep raising rates. They're going to keep them the same or they're going to lower them. Today they're making a big decision. I'm not sure which way it'll go. It'll probably be a quarter basis point or maybe zero. They're probably not going to go to a half a basis point. But if they do, that'll be the last time they do. So what does that mean? The federal government has pumped money into the system once again, $2 trillion. And when they cannot raise rates because they're going to cause the banking system to fail. So before, when we had runaway inflation back in the late 70s, early 80s, Reagan and Volcker came in and they raised rates all the way up to like 14%, caused a recession on purpose, and then set the next 25 years of solid growth at less than 2% inflation. Well, they're not going to be able to do it this time. So we're going to have runaway inflation. And what does that mean for real estate? The economy is going to probably do pretty well because the influx of money and then the new technologies like AI and maybe fusion and maybe some other technologies that are coming on board, that's going to make the economy probably stay from a depression. And so what's going to happen is inflation's going to run like crazy. It's already running like crazy. It's like 10%, really. They're saying, 6%, 7%, 8%. It's really like 10%, and then it compounds every year, 10%, 10%, 10%. So if you have money in the bank, it's going down in value very, very quickly. So real estate is a great hedge against inflation. Let's say you buy something cash. At least it goes up with the value. The dollar, as the dollar goes down, it costs more dollars to buy the property. But if you have a loan on it, then you're leveraged against inflation. So buying real estate is one of the best things. So if you're going to be thinking about waiting, I would not wait. We're going to see a runaway inflation here in the future. You don't have to panic buy right now, but I would start shopping if you're thinking about buying, or if you're thinking about moving up. Now's the time to do it. People say, oh, interest rates are so high. No, they're not high. You're going to look back and say, wow, I should have grabbed that 6% loan when I could. Because we're going to see runaway inflation, and rates are going to keep going up and up and up and up, and they're not going to be able to stop it. Because if they raise rates too high at the Fed level, it's going to cause the banks to fail, and it's going to cause the economy to crash. So we're in a catch-22. I would say if you have money right now, buy real estate or buy Bitcoin or buy gold or buy silver. Buy something that floats with inflation and doesn't eat away your cash. So if you have any questions, give me a call. I have a pretty long track record of being right. Even though I'm humble, I think I'm pretty right now. So if most people aren't buying because they think it's going to come back down, no. It might come down a little bit as a shock of inflation hits, but it's only a couple percentage points, and then it's just going to run away. So you can keep this video, and 2 years later, 2 years from now, call me up and either mock me or congratulate me that I was right. But you're going to see that this is going to happen. So don't wait. Buy something now, and start shopping now. Right? Call me. Thanks.